Diwanji, partner and nation leader, financial services at EY India. Abhisar, my question to you. What do you think, what do you make out of this entire talks between the two large groups? This is by far one of the biggest mergers we are seeing in the Indian corporate history.
Yeah, at least in the financial services space, yes. And I think more importantly, I think there is a migration towards making cost of funds being lower in most cases. So, for example, if you look at it from IDFC's side, they have the capital to deploy, and they're getting a retail asset base that they acquire. Shriram, effectively, though they have better ROEs, obviously see that the cost of fund advantage will help them expand the business better. So the transition to a bank was given. Effectively, in fact, if you remember, Shriram Capital actually applied license. So this is a surrogate acquisition for them of a banking license. As far as IDFC is concerned, it's an acquisition of a retail portfolio. The challenges, of course, are around CRR, SLR. As you said, they're going to apply for an exemption. But if they don't get an exemption, I think there will be a high-cost fundraise in the market by the merged entity, which will have to go towards meeting the CRR, SLR requirement. And that would actually be a drag on earnings at some stage. But if they get the CRR, SLR, obviously it's better. If the exemption is there, it's better. The other thing is the core of the issue is how do you transform an NBFC into a bank? To actually get the transition from somebody who's just used to giving loans to also generating deposits, to also doing transaction banking, to also doing, servicing a customer. It's a very difficult transition, but a necessary one. So we'll see how that happens.
Well, yes, Abhisar, actually, we will see of all those pros and cons in a bit, but just wanted to understand, before this merger goes through, what do you think will the RBI approve this, given the fact that Piramal Enterprises might just hold around 10% stake, and also the new licenses were essentially given to increase the priority sector lending. Now, with this happening, IDFC is just going ahead and acquiring stake in Shriram and not essentially increasing the priority sector lending. What do you think will be RBI's stance on this?
One is, I don't think RBI gives licenses only to increase private sector. This is a universal banking license. Also, I think Shriram Truck Finance at least does have a lot of priority sector in it. So there will be some level of priority sector, some level of priority sector coming in, but though I don't think that is the criteria. I think the bigger criteria is the exemption requirement under the CRR SLR. Now that, I think there needs to be very valid reasons why one should be afforded that. ICICI Bank was not given.
Abhisar.
So ICICI Bank was not given that exemption. So they had to raise high-cost deposits to actually, meet the CRR.
Abhisar, my question, I just, say what some of the investors in Shriram Group, want to know. Don't you think Shriram Group as a whole, what they're doing right now is really niche and more profitable? They are very large compared to IDFC Bank in terms of touch points, in terms of branches, in terms of even cost of funds right now. What is the need for bank?
So the need of the bank obviously is because we will gravitate to lower cost of deposits. The market is getting nicher and pricier by the minute. Please understand an NBFC model. It's easier to pick up the low-hanging fruit. But as you grow the book going forward, the high cost or high yielding assets actually go down, and you move towards a much lower credit risk model, which is effectively means the lower yield model. And when you expand to go towards the lower yield model, you necessarily need a good deposit base. So effectively, banking becomes an eventuality for an NBFC which grows beyond the size. And that, I think, is the biggest reason why they would want to do the deal.
How much do you think Piramal role is into this, in terms of driving this merger?
I have no idea, frankly.
But Abhisar, I want to ask your view on this Piramal thing itself. So, given that Piramals will end up holding more than 10% in IDFC Bank, how are you reading that that particular piece in this entire merger? Because RBI has been apprehensive in giving licenses to the large conglomerates, and especially for Piramals, they also have a very large exposure into the real estate. Given all these complexities, how do you read, and will this set a precedent?
The RBI rule, RBI says that if you have a shareholder who owns more than 5% will require specific RBI approval.
Correct.
So I think anything more than 5% will head in for an approval. But do remember, this is actually a legacy stake purchase. So if at all RBI does, one is it can go, it is within their powers to actually go up to a 10% approval also. However, if they do decide that there needs to be dilution, I think there will be dilution norms that they can put in to say over a period of time you could dilute.
No. I understand your point of they'll need to dilute in case if there is a merger.
If at all, there is not approved.
But will this set a precedence for other corporates to look at this kind of
No.
reverse mergers or mergers through NBFCs and getting a banking license or getting the presence in banking?
So if somebody is, let me take an extreme example. If a corporate were to own 100% of an NBFC and through a surrogate reverse merger into a banking wants to own 51% of the bank and then wants to reduce down, I don't think the RBI will allow it because they will see the intention. Here, I don't think the intention is to control a bank through a surrogate holding. I mean, they held anyway 20% odd in the entities. They would now come down to 10% in the overall. For them, it's a financial investment. In fact, they would potentially look at an exit over time.
Okay, and that